Hello there, I'm Ariana CP Hunter, real estate broker and financial expert, and today we're going to be talking about credit cards and their retirement. Well, it's so sad that in an age where you don't have to be stressing out about money because hopefully you had your house paid for and your vehicle paid for, and your social security is coming just to supplement, maybe pay your yearly taxes, or to supplement you buying your food, your medicine. This is not the case for a lot of people. Unfortunately, people are just swamped with credit cards. And the sad thing is that most people calculate with their social security, and it happens. I see it all the time. Where, for example, let's say they were getting $800, which $800 is not a lot of money to begin with. $800 for someone who already paid off their house. $800 have the house paid off, the car paid off, and only they need food and pay their taxes, or maybe buy some medicine, supplement to medicine, because they're already paying the deduction for their doctors. Most of the money when you are older is going to be with medicine. It's going to be with taking care of your person. And many people, they're overextended. They have 4 credit cards, maybe 1,500, 1,200, for example, right? For this specific example. But it is not a lot of money, but it's a lot of money when you don't have a lot of money coming in and your money is fixed. Once your money is fixed, you're in trouble. A lot of credit cards will not tell you, the credit card companies, but what happens is they drop your limits. Let's say you had $3,000 or $5,000, whatever that may be, and all of a sudden they drop it to 1,000, and you're already using 1,000, so you're already at your limit. So that's going to affect your FICO, and most importantly, it's going to affect you because some people use that money to travel, use the money to buy food, go to a doctor, a supplementary, and they only pay their minimums, and that really could throw people off. The government does that for whatever reason. Every case is independent, but people count on it and they don't realize that they might be cut off. But credit card companies do know this, that once you retire, you're going to be in fixed income, and they allocate for this by reducing your limits. And people get upset and they say it's not fair, or they try to hide it. They think that the companies do not know what you're doing. The companies know what you're doing. They can tell a pattern by what you're using your credit cards on. And if it's traveling or medicine or paying for your house, they know you're in trouble if you're using your credit cards to pay for your rent, or make car payments with your credit card, or buy food with it, which shouldn't be. You shouldn't have to use credit cards to buy your food. So if you're someone getting ready to retire, I hope that you are debt free. As far as credit cards, get into a repayment plan, cut them off, don't use them anymore. If you cannot handle the payment, if you're going to be stressed out about it, just don't count on it. Like they don't exist, and count on what you do have. The best remedy for temptation is not to have it. And ask for assistance if you require it. But that's what's going to happen. Your credit limits are going to drop, but not because of you. They're going to do this to you. Don't assume that everything, unless you have cash in the bank that you know that is yours, you're earning, you want to put it there for you to use. That's the only thing that is really secure, because you are securing on yourself. You are your own bank. Other than that, don't count on anybody else. Nobody's coming to help. I'm sorry this is happening, but it's the truth. Don't let this happen to you.